All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So, today I wanted to talk about business acquisition. You are in the process, or if you have acquired an existing business, there could be a good way that you can write off or deduct a good amount of the purchase price, which can be very helpful down the line to help reduce or eliminate your tax burden. It's through something called Goodwill. Now, what Goodwill is essentially the premium that one might pay above and beyond the actual value or book value of the assets that you're buying in a particular business. So let's say that you're buying a manufacturing company, right? And you're buying a building, equipment, all of the assets involved with this company. Now, they may be on the books for a certain amount of money, but usually when you are purchasing a business, that value is not necessarily determined based upon what the book value of the assets are, right? It's usually some sort of market value. And with that, assuming the business is healthy, there's usually a premium one might have to pay above the actual market value of the assets. And any premium that you would pay above that usually goes towards Goodwill. What's Goodwill? Goodwill is an intangible asset. So it might be things such as the reputation of a company. So the reputation, the customer list, all sorts of intangibles that you don't necessarily have a hard cost on. So you know that they may have some sort of brand name that's attached to the company. So those are valuable assets above and beyond the physical hard assets that you quantify as what you're paying. So all of those things contribute to what's called Goodwill and would be part of a reason why one might pay a premium for that. So the beautiful thing about the Goodwill is that is the part that can actually be deducted over the period of time. So Goodwill is usually amortized over the course of 15 years. So just a quick thing to take into account if you're in the process of purchasing a business and feel that the premium might be a bit steep. Think about the tax benefits you may get because you will be able to write off that premium, so to speak, over the course of 15 years. Now, with other assets, if there's any hard or physical assets, you'll still be able to depreciate those over its lifespan. Usually the hard and physical assets are depreciated between 5 and 7 years. You can write those costs off. But again, that intangible premium for Goodwill is usually deducted over 15. So a quick tidbit to take into account if you're looking to make a purchase for business. A good way to get some nice write-offs for years to come. I hope this helped. And if you have any more questions about this particular topic or any other accounting tax related questions, feel free to reach out. I'm happy to help. All right. That's all for now. And I'll talk to you in the next one.